a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The AI trade coming back strong. Micron reviving confidence with a blowout forecast. Flush with supply, Brent crude erases wartime gains as traffic ramps up in the Hormuz Strait. And treasuries and the dollar slipping ahead of consumer spending and jobless claims data a little later. Let's get a check on markets around the world now. Back where it began in Asia. Let's get over to Winnie Su for the latest. Winnie?
Bonnie, lots of excitement in Asia's chip space today, especially after those upbeat earnings from Micron. Now, we also have SK Hynix here surging, and in fact, it is the top contributor to Asia's gains today on that plan to be listed in the U.S. next month. Now, investors are expecting this listing to help narrow its valuation gap with its global peers like Micron. But also, interestingly, we have similarly Japan's Kioxia planning to be listed in the U.S. as well next spring. So it does ask that question about how sustainable this AI trade is actually going to be going forward. Now, flip the board, we zoom out and take a look at the broader Asia market because we have MSCI Asia here up about 1.5%, also supported by the lower oil prices. And we do have tech-heavy gauges in South Korea and Japan leading gains, while the likes of Hong Kong continue to underperform.
All right, Winnie, thank you so much. That's Winnie Su in Hong Kong. Now let's get over to London for a look at Europe with Justina Lee.
Good morning, Bonnie. We're also seeing a risk-on day in Europe today, with the Stoxx Europe 600 up about 0.5%. And of course, it's also led by a lot of those tech names, with tech being the best performer subsector today. And now when it comes to currencies, as you mentioned earlier, generally it's an up day, it's a down day for the dollar. And so we're seeing strength in the euro and also in the pound. Now, of course, we've spent a lot of time this week talking about UK politics. And it does seem like generally from the fixed income markets, there hasn't really been a freak out. And I think part of that reflects the fact that, a lot of this news has been priced in. And if we flip the board here, we can see that actually 10-year gilt yields have been falling this month, reflecting more a lot of those macro forces, like the fact that, investors don't really expect that many rate hikes anymore in the UK. But of course, we're also watching UK politics. But at least there seems a bit more clarity in terms of the picture going forward, with not a lot of competition for the PM seat, and also the path kind of pretty clear for Andy Burnham to take over. Bonnie.
Justina, thank you. Justina Lee there in London. Well, markets here in the US have been on tenterhooks for a couple of days. It's fair to say Micron saved the day and perhaps even reshaped the AI narrative with its massive margins, and it's solving essentially of the conundrum, locking customers into contracts for up to 5 years, so potentially getting rid of the boom-bust cycle. That has the Nasdaq rebounding today. Micron itself up 17% in the pre-market. As you can see, Nasdaq rebounding. The Russell not so much, but bear in mind the Russell hadn't seen the sell-off and it's been outperforming the rest of the indices month to date. And then we have S&P futures up 0.7% as well. Obviously, the S&P also benefiting from banks upping their dividends by 10 to 15%. Banks in general have been underperforming the indices this year as well. In terms of yields, not too much movement here. Everything else seems to be sort of pattering along nicely, including the reopening of the Strait of Hormuz. And you're seeing the 30-year yield just at 4.86, up about 2 basis points, but still very, very narrow spread there between the 2s and the 30-year yields. And in terms of oil, we're right back down to where we were right before the war. 75 on Brent, 69 on New York crude. It's quite the picture for oil. All right, let's get to some individual movers this morning. Some big ones. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Of course, as you were mentioning, this AI trade is back on. We've got this enthusiasm now back after the weakness that we saw yesterday. And of course, a big part of that is being driven by Micron, which came out with this very, very upbeat outlook, confirming this growth runway for AI. And so we are up about 16% this morning. Moving on to another company that is also riding this very positive take wave this morning, and that is Qualcomm, that has come out with also a very strong outlook. And that really confirms for investors investors that the company has been really able and successful in diversifying away from its core phone business and more towards AI. And so we're up as well quite strongly there for Qualcomm. And finally, Alphabet is down this morning slightly as it is said to be losing two very high-profile AI researchers to Anthropic. And of course, given how competitive of a market this is, this could impact Google's ability to really stand out in that AI market. And so we're down about 1.2% this morning for Alphabet.
Chloe, thank you so much. Chloe Melly there. And coming up in this hour, we're going to dig into those Micron earnings with Sanjeev Rana of CLSA. Also, more in the AI trade with Robinhood CIO Stephanie Guild. Micron then soaring in pre-market trading after its quarterly sales forecast crushed expectations, and so did all of the other numbers. Let's get more with Bloomberg's Ruhel Amin. Ruhel, it does seem like we dodged a bullet yesterday. Things could have been very, very different. Is there some lesson that we should learn from this?
Yeah, very much so, and good morning. Yeah, so I think the market did obviously expect a very strong quarter from Micron. AI demand for memory chips has, of course, been very strong and supply has been tight. But what's more interesting is obviously the guide. The 4Q guide was well ahead of expectations, but also the qualitative commentary from management who expect supply to remain tight beyond 2027. And that has enormous implications for pricing power, gross margins, and ultimately the stock and valuation.
Ruhel, does this mean that we're now sort of in the memory chip performance of the AI narrative, and where does it move to from here?
Yeah, exactly. I think the big question for memory and Micron more specifically is this still a cyclical stock and a cyclical industry, or has AI transformed the economics of the industry into one where demand is more structural? Because if it is the latter, then again, these stocks are going to be valued very differently. And that's partly why we've seen such a strong run year to date. Profitability is extremely strong. The street is modeling 80% plus gross margins. And I think the view at the moment is that AI demand is here to stay, and actually it's more structural than cyclical. Now that's the key question that the market's been grappling with.
Absolutely. Ruhel, thank you so much. That is Bloomberg's Ruhel Amin. Sanjeev Rana is head of Korean research at CLSA. He and his team put Samsung Electronics at a target price of 540,000 won. SK Hynix also massively upgraded. 3,700,000 Korean won is the price target there. And Micron has been raised to $1,700, up from $1,320 after yesterday's earnings release. Sanjeev joins us now. Sanjeev, sure, we have seen Micron try to solve this problem of the commodity type cycle, right? But what if a customer comes along and says, we've paid for all this memory, fine, we're just not going to use it anymore. We're changing strategy, we'll take a one-off write down. Can that happen?
So, as Micron said, and Korean suppliers have also been saying that the contracts these companies are signing, they're quite different from the past. So there are legally enforceable contracts, and there are some strict penalties. And in many cases, these companies are also paying upfront payments. So I believe it will not be easy for these companies to get out of these contracts. But more important thing is that why these companies are signing these contracts at record high prices. The simple answer is that their priority is no longer the performance or cost, but reliable access to memory, capacity availability, and long-term supply certainty. So no wonder memory has become the most critical and strategic layer in the entire AI stack.
Sanjeev, presumably these memory chip companies will be expected to iterate on their products, right? How fast do they need to come up with better products, better solutions in order to hold the territory they have?
So currently there are only 3 major memory suppliers, and in terms of technology, they are pretty much at a similar level, I would say. Of course, there are small differences in terms of product mix and technological capabilities, but not much. So in that case, I don't think there will be any disruption, coming along. And there are some concerns that innovations in algorithms side could lead to some lower than expected demand. But I don't agree with that view. Actually, algorithmic innovation has been going on for a while now, and And what we have seen is that that has helped drive AI's adoption. So overall, our view remains that memory demand will remain very strong in the coming years, especially when you consider the requirements for agentic AI systems.
So Micron says it has 16 strategic customers. Is that enough variety? Would you like to see that number increase, or does it need to?
Oh, it will definitely go higher. I mean, as the company said, they have signed 16 strategic customer agreements, and they represent about 20% of their DRAM volume and 30% of the NAND volumes. But when all other contracts currently under negotiations are completed, they expect like 50% plus of their revenue to come from these strategic customer agreements.
So if memory makers need to be valued, as you say, at AI foundation infrastructure provider level, how much upside does that imply across the board?
I think all these three memory suppliers are still trading at single-digit PE multiples, but most of the semiconductor stocks, except memory, they trade at anywhere between 15 to 40 times PE. NVIDIA trades at 20 times plus. I see no reason, like with all these contracts that we are seeing, that just provides long-term visibility, and that will enable suppliers to flexibly adjust their capex, so that will mitigate price declines and enhance profit visibility. So in that sense, one would expect that these stocks should be at least trading at double-digit multiples, and in the longer term, I think we can look forward to multiples like 15 to 20 times.
Wow. Well, as you say, visibility is huge, and now we have a lot of transparency. At what point will the likes of Micron, SK Hynix, all these other companies be able to, or at least not be able to, surprise the market? And at that point, does the market punish them? Because it seems like a beat and a raise is no longer good enough. You have to beat, raise, and surprise.
I think the earnings surprise cycle will come to an end soon, given these companies are now signing long-term contracts. More than half of their revenue will be coming from these contracts. So the room to surprise is kind of limited, although in the near term, I would say that the trajectory of memory prices remains very solid. I think memory prices will be going up higher than expected. This is what our channel checks have been suggesting. We just had a very big Northeast Asia conference that was attended by 400 investors and more than 80 corporates. And our checks suggest that in the near term, memory prices are likely to go higher. So that is one of the reasons, like Korean suppliers, for example, are not in a hurry to sign these long-term strategic agreements, because they think maybe in the next 1 to 2 quarters, prices could be going up like maybe 20-30% more. So better to sign the contracts then. And I'm sure Micron will also see the benefit of price increases in the coming quarters. So in the near term, definitely earnings, that there is room for surprise. But yeah, in the longer term, the story is that memory is becoming so strategic, and the value, like AI, isn't just causing an increase in demand. It is reshaping how memory creates value. And I think in this is what investors need to understand.
Sanjeev, how material is it for Korean companies like Samsung and SK Hynix that Korea has definitely got some market structure instability issues, and that's been evident all along, but particularly in March and again 2 days ago?
I'm sorry, I didn't get your question.
Korea's issues with its market stability, does that portend problems for the likes of SK Hynix and Samsung?
Oh, okay. So actually, Samsung and Hynix are not more than 50% of the index. So the way their share prices move, the Kospi index moves accordingly. So there is a very high concentration risk, and this is what investors are worried about. And a lot of investors, they can't have more than 10% of their portfolio in a single stock. But given the performance of these stocks in the last 6 months, 12 months, foreign investors had to sell. So they have been selling more than like almost 100 trillion Korean won in Samsung and Hynix in the first 6 months of the year. I think that selling could continue, but that's purely, for risk management purpose. And like fundamentally, these companies still remain very cheap. In the last 12 months, we have seen Samsung and Hynix consensus earnings going up by 700 to 800%. So in that sense, one could argue that valuation multiples have barely moved.
All right, Sanjeev, thank you so much. Wonderful to get your opinion this morning. Sanjeev Rana of CLSA, upgrading all of those micro chip makers. Now, to other top stories trending on the terminal this morning. Iraq says it could eventually leave OPEC unless the group allows it to raise its oil production quota. An oil ministry spokesperson says Iraq remains committed to OPEC, but the group should allow the country to increase its production to meet its needs. The remarks come just a few months after the UAE quit the group so that it could pump more. The European Union has signed off on a US trade deal ahead of President Trump's July 4th deadline. The agreement would eliminate levies on US industrial goods and some agricultural products. In exchange, the European Union would face a 15% tariff ceiling on its exports to the United States. Anthropic is accusing Alibaba of a large-scale effort to, quote, illicitly access its Claude AI model. In a letter sent to Alibaba and US officials, Anthropic says the Chinese firm used thousands of fraudulent accounts to target Claude's most valuable capabilities for use in its own chatbots. Coming up. Big US banks boosting dividends for their investors after passing the Fed's stress tests. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. All of the 6 biggest US banks passing the Fed's annual stress tests. The lenders increasing their investor payouts then, with Morgan Stanley hiking as much as 15% in its dividend per share. Bloomberg's Ven Ram joins us now for more. Ven, the banks have been not performing so wonderfully year to date, right? The S&P index has definitely lagged the broader index. The BKX, the KBW index, maybe up 11%, but that's still, just a relatively okay performance. Where is the weakness coming from?
Well, I think that, this rotational trade into banks is going to continue, because I think that what has been happening of late is that investors have been rotating out of chips and rotating into some of the more sedate sectors, as you might put it. That is one of the beneficiaries has been banking. But these banking stress tests, to give it some context, Vonnie, I think that they were obviously founded in the aftermath of the 2008 financial crisis, and I think that they probably lived through the peak utility, but I think that it is still an important diagnostic tool to see how banks will fare against if there is a downturn in the housing market, and I think for that reason it continues to be important.
Yeah, absolutely. Well, I'm sure investors will be pleased with the upping of the dividends. Data later expected to show, an uptick in personal income spending, but also gains in top line and core PCE. How much of a material impact will it have on FOMC committee members' views?
I think that obviously it's going to be very pivotal to their views. I think a sustained overshoot is not going to be tolerated by this committee, especially given Wash's latest pronouncements that he will fix inflation. And if he can continue to get numbers above 3.3, that will be worrying for the Fed, because they've penciled in a rate of 3.3 for this entire year. So to the extent that there is an overshoot of that estimate, we are already well above the Fed's target rate for a long time. But if we are overshooting the estimates today, I think that's going to be pretty grim boding for treasuries. We have kind of rallied in the past few days, but I think that the rally is kind of outliving and it's coming to its end, natural end.
We'll see what impact it has on the curve. Ven, thank you so much. That is Bloomberg's Ven Ram in Dubai. Coming up, updates from a pair of devastating earthquakes in Venezuela. Your front page news next. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the New York Times leading with the latest on the 7.2 and 7.5 magnitude earthquakes in Venezuela, the largest since 1900. and likely more deadly. Dozens of buildings have toppled. 32 people are confirmed dead so far. Rescue efforts are frantically underway. The US is coordinating a response with the interim government in Caracas. Next up, on the Washington Post, the US Senate's reversal on Iran. The chamber rejected a resolution that would have forced President Trump to end the war. The vote came after the president criticized Republicans of undermining Iran negotiations. And finally, Bloomberg reporting on NATO Secretary General Mark Rutte's Oval Office visit, aimed at easing President Trump's anger with the alliance for its reluctance to support the Iran campaign. Rutte brought posters with gold lettering and bright red charts showing higher NATO defense spending since Trump's first term. Rutte spoke with Bloomberg after the meeting.
What I think is important is to be fair, and fairness dictates that this president is really doing a huge amount of work to get NATO in better shape. He had a big success last year in The Hague with the 5% spending commitment.
Mark Rutte there speaking to Bloomberg. Let's check on these markets after a very nervy 2 days, right? That massive sell-off that began in Korea, bled into the US session, and then all eyes were on Micron's earnings last night. Well, Micron very definitely calmed nerves, and S&P futures are pointed higher, but Nasdaq futures are pointed even higher still. Not quite perhaps at the level that we were at pre all of these jitters, but we might get there. The dollar index just easing off slightly, and the 10-year yield up almost a couple of basis points. We do get that data later, by the way. Coming up, we're going to be speaking with Stephanie Guild of Robinhood. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The AI trade coming back strong. Micron reviving confidence with a blowout earnings. Flush with supply, Brent crude erasing wartime gains as traffic ramps up in the Strait of Hormuz. And treasuries and the dollar slipping just a little ahead of consumer spending data, also jobless claims in 3 hours. So let's take a look at these markets then, because after a very nervous couple of days, you see Nasdaq 100 futures pointed higher. And how this morning? Micron is up something like 17% in the pre-market. It just blew the lid off earnings. Margins were over 85%, almost unheard of. It's able to price higher. It's also able to lock in customers for 3, 4, 5 years. You saw it over in Korea as well. It hasn't quite reclaimed the highs pre the sell-off, but it's right back in the vicinity. And we're also seeing the Russell 2000 perhaps catch up, not as much because it didn't see that sell-off that we had seen in the Nasdaq. Let's move to some other asset classes because we also have economic data today that investors are going to keep an eye on. The 2-year yield barely moving, the 10-year yield up almost 2 basis points, same for the 30-year yield. So we'll see what we get in terms of PCE data. And then Brent crude continues to come down, 72 and change now. Can you believe it? New York crude below $70 a barrel, and Bitcoin, it dropped well below $60,000 a coin yesterday, right back at 61 and change. Let's get to some individual movers now. A fascinating pre-market. Here's Chloe Melee in London.
Good morning, Bonnie. We've got Micron shares surging this morning, up more than 16% after delivering those blowout results and having this very strong, very upbeat outlook. And this now means that this AI trade is very much back on. We are seeing that reflected as well in some tech stocks in Asia and Europe, and really confirms that this AI growth is not going anywhere for Micron. It is also a very similar story for Qualcomm, which has also delivered a very upbeat outlook and is also up this morning at Qualcomm in pre-market trading. It is a company that has managed to really diversify away from its really core business, which was around phone chips, and move more towards this AI business, which has been, of course, very beneficial. And finally, we are going over to Alibaba, which is down this morning after Anthropic accused it of illicitly trying to access its AI models and really undermining potentially the decision from Anthropic to keep its products out of China. And so we're down for Alibaba this morning, almost 3% in pre-market trading. But we'll be watching out for any further developments on that story as well, which is very interesting.
Chloe, I imagine all of these China companies can't wait for the day when they're able to catch up with the US on AI. Chloe Melly there in London. Let's get back to Micron then. Shares higher by double digits. That's an understatement after a stronger than expected quarterly sales forecast, pointing to continuing momentum in AI demand. Joining us now is Jake Silverman of Bloomberg Intelligence. It wasn't just the sales forecast, it was literally everything, Jake. Micron managed to beat, raise and surprise. How many more quarters can it do that for?
Yeah, we're about halfway through 2026 now. Our view is that they're going to be able in a tight supply and demand environment now through at least 2027. And a lot of this is just simply because the entire industry, not just Micron, that includes Samsung, SK Hynix, the three of them account for the majority of at least DRAM capacity and a very large portion, at least the majority as well, of NAND. And so as a result, because none of them can really build capacity fast enough to meet the demand that we're seeing from AI, it's high bandwidth memory. It's also DRAM that goes into server products, but it's also in our phones as well, and a lot of pretty much every consumer product. And so, considering that the fact that they can't build this capacity fast enough, and demand keeps going up, it's hard to see when this stops in the near term. So, conservatively, we think it's through 2027 at this point.
Boardroom, and you're talking about bringing capacity online, building factories, getting other factories, amped up. Would you not be a little bit nervous that at some point some of this demand goes away, whether it's through pricing or just the fact that companies decide they can't afford to go all in on AI and change their strategies?
Yeah, of course. Look, we've already seen some demand destructions. If you think about PCs and smartphones on the lower medium tiers, as memory pricing has increased, if your bill of materials cost is usually $200 and suddenly what was usually a small portion of that suddenly doubles, triples, quadruples in price, and your margins are already thin, it's going to result in reduced production or reduced demand, one or the other. So we've already seen that to some extent, but AI has more than offset that because we've seen higher intensity, more memory per AI server. High bandwidth memory reduces capacity for standard DRAM because it requires more wafers per die. And so, yeah, look, of course, there's a concern. I think right now the biggest concern isn't so much would there be less demand for PCs or smartphones. It's more so AI CapEx. So while AI CapEx continues to grow, while memory becomes a larger percentage of that, that suggests that we're going to see continued memory demand. On the other hand, could there be a slowdown? Of course. I mean, look, we've seen past cloud cycles. Is this a little bit different than that? Yeah, I think that's probably the case. But we've seen cloud spending decline or slow down tremendously in some years, even if the trajectory is generally up and to the right. And so that is a concern for Micron. On the other hand, they've also been signing a lot of these, they call them SCAs, these long-term contracts. I think they average around 3+ years, include data center, consumer, automotive customers as well. And that's locking in floor pricing at favorable margins. If you look at prior cycles, they've peaked at around 60% gross margin, Micron. Now they're guiding to 86%, but it looks like these SCAs are locking in at least 60% gross margin. So that's, while it might be a concern for investors for sure, it does point to maybe a smoother cycle on the other side.
That's for sure. Jake, thank you so much. Jake Silverman of Bloomberg Intelligence. Joining us now is Stephanie Guild, CIO of Robinhood. Stephanie, it seems like we dodged a bullet, and I'm wondering if there's a lesson that we can learn from this, because essentially not that much has changed between yesterday and today, except one memory chip maker has said that it has some customers. But yet the market may have very well sold off in a very substantial way if Micron hadn't surprised.
If they hadn't greatly surprised, huge expectations, expectations of 1,000% earnings growth quarter over quarter. And expectations are everything usually. I think it just shows you that we are going to go through these fits and starts in the marketplace because we are taking an agentic world that progresses very fast and puts it against a physical world that can't move as fast. And I think that's what makes people nervous, is that stock prices are up a huge amount. people have made a lot of money, investors have made a lot of money by being invested in these names, and if there is some hiccup, even if growth was 850%, that's still huge, but if it's already in the stock price, and I think that's what you'll have, a lot of these fits and starts.
You know, one of the first rules of investing is if you don't understand what you're investing in, you have no business being there, right? Now, if Micron, even after the sell-off, was very close to its record, and this morning we're seeing it up 18% in the pre-market, I mean, literally being completely repriced after yesterday, we have no idea what's going on in the AI sphere, and we shouldn't be investing in it, correct?
I mean, I don't know about that. I just think that it can be continually underestimated, the amount of money that needs to be spent on things like memory, on things like energy, infrastructure. SK Hynix put out a piece yesterday basically talking about, don't forget about all these other things that need to be done in order to make this all work. And I think that can be continually underestimated, and that's why I think it's hard to understand.
Well, and we keep getting catalysts too. I mean, the latest one is going to be SK Hynix, you know, with its IPO, and then potentially, you know, it's an inclusion of the SOX, and it's just on and on and on. How many Robinhood customers are in one of these memory chip makers or one of the hyperscalers?
Micron has been our most popular stock over the last week, and when it was selling off, along with, you know, sort of the whole AI trade, they were going into it. They were buying that dip pretty ferociously. So it's been
happening a lot.
Yes.
It's retail buying the dips. Any concern that, you know, this might all go wrong at some point?
Sure. I mean, you to your point, like, you don't know when expectations will catch up with reality, and I think we've seen that with a stock like Nvidia, right? Like, that was something that kept surprising, and now at this point, the last couple of earnings calls, it sort of met expectations, and the stock hasn't done very much. So I think that we will get to that point at some point, but I'm not sure yet. But I do agree that the amount of equity supply that is coming into the market, it's not just new IPOs, but it's also, you know, new issuances to fund all of this from stocks like the Mag 7. And that's where I started calling them the Meh 7, because, you know, they used to be the cash cows, and investors just have to change the way they think about those companies.
Speaking of issuance, we have to talk about SpaceX. So I'm sure your customers were fascinated, and we all are, with the daily price. Now, there was a lot of sort of negative, you know, maybe narrative speak before it went public, you know, be careful everybody, this, you know, IPOs don't always do well, and so on and so on. What did the Robinhood customer do? And after we saw the 50% increase and then the drop back, have they been getting out?
We saw a little bit of trimming, but not so much. We had our customer base was enthusiastically wanting to participate in the IPO. We were able to provide shares to our customers, probably not as much as maybe they wanted. But I do think that the rules for SpaceX had been changed relative to other ones. And I think that's why, you know, if you look at history, you would say be careful. But I think our customer base has shown, you know, Tesla used to be the #1 stock, most traded. It hasn't been because Micron and SpaceX have taken that over. And I think it really is, like, if you believe in the long-term story, which a lot of our customers do, and in Elon, you know, that's enough, at least for now.
You're at the coalface of a lot of the meme stock type trading, right? And we're seeing it a little bit with Wendy's. I mean, we saw a huge increase yesterday. It's already up 16% of the pre-market. How do you prepare for a day like that? Do you treat that kind of trading any differently to other trading? And I mean, do you see in aggregate, is money lost or made on those kinds of trades?
I think in the beginning, the money is made because it is, I do think the stock market in some ways, you can call it a meme stock, but in a way it's like a voting machine. Like Wendy's has nostalgia. Other names that have become meme stocks in the past have had nostalgia for a certain subset of our customer base and retail in general. And I think that's what they end up saying, like, no, save this company. I mean, that's what I was kind of reading across the Reddit threads and X. And in preparing for that, like, you know, we just really try to maintain as much liquidity for our customer base and support what they want to do. We don't.
Robinhood strategies.
Yes. This
is another way that you want to support your customer.
Yes.
It's a digital choice for them, if you like.
Yes.
And are you using AI in those choices?
We do incorporate AI into our investment analysis. We have a human team, and we have a quantitative investment process and then a qualitative overlay, and we talk to our data using AI essentially.
What kinds of stocks are in there? I mean, do you have an allocation in every sector, or how does it work?
We are pretty diversified. We have about 50% of our portfolios in ETFs, and that some of them are thematic internationally, for example, because we don't have international stocks in our platform besides ADRs. And then we have single names in them, about 50%. And I would say a good portion are in the AI infrastructure trade, but we do have allocations to healthcare because we are finding interesting opportunities there. And Natera yesterday had a good day. And then we have some energy names as an offset.
We do have to leave it there, but
Yes.
very quickly,
Thank
in the
you.
prediction markets on Robinhood, how's the World Cup doing? Is it blowing away
Oh,
everything
yeah, it's very popular on our platform.
Okay. Stephanie, thank you so much. Stephanie Guild there of Robinhood. Now to other top stories trending on the terminal this morning. Iraq says it could leave eventually OPEC unless the group allows it to raise its oil production quota. An oil ministry spokesperson says Iraq remains committed to OPEC, but the group should allow the country to increase its production to meet its needs. The remarks come just a few months after the United Arab Emirates quit the group so that it could pump more. The European Union has signed off on a US trade deal ahead of President Trump's July 4th deadline. The agreement would eliminate levies on US industrial goods and some agricultural products. In exchange, the EU would face a 15% tariff ceiling on its exports to the US. Amazon is increasing its investments in India by $13 billion. The new investment will expand the data center capacity of Amazon Web Services in Mumbai and Hyderabad. Amazon's cumulative investments in India from 2010 through 2030 are now set to surpass $88 billion. Coming up, President Trump pushing for an $88 billion spending package. We'll break down that bid next. This is Bloomberg.
For the first time in 3,000 years, we are finally going to have peace in the Middle East. We're going to have peace in the Middle East. Since the agreement, the stock market and your 401ks are skyrocketing upward, and oil prices are plummeting downward. Today, it hit a new low, and the world is a much safer place.
President Trump appears to have won over some key Republican senators on the Iran war. The Senate has rejected now a resolution to end the war after a pretty heated private lunch with Republican lawmakers. The meeting resulted in Senators Bill Cassidy and Rand Paul changing their votes. Joining us now from Washington is Kate Ackley of Bloomberg Government. I mean, essentially symbolic, Kate, because the war is all but ended anyway. But what happened?
Well, yesterday, President Trump was on Capitol Hill to meet Republican senators, as you said, for their lunch. And there was a sort of a heated exchange, especially with Senator Bill Cassidy, who, you recall, President Trump endorsed his opponent in a primary. So, he's kind of a lame duck now. And we've seen that with some of these Republican senators who are no longer still, running for re-election for whatever reason. They sort of decide to stand up to Trump. There was this heated exchange, according to our reporting, during the lunch. But you're right. By the end of the day, by late into the night, Senator Cassidy had sort of switched his vote, if you will, and so did Senator Rand Paul, who I think voted present on that. So said, he wanted to give the president a chance to do these peace negotiations with Iran.
What does it mean for the housing bill? Because the president wouldn't sign it, really partially because of all of this. And it was one of the pieces of legislation that actually was getting done this year.
Right. I mean, this had a complete bipartisan support. And you saw, from Senator Elizabeth Warren, a Democrat from Massachusetts, to, many Republicans, a very overwhelming bipartisan vote in support of that housing legislation aimed at trying to make housing more affordable for Americans. What President Trump said yesterday, and there was this whole backdrop set up for a signing ceremony on Capitol Hill with flags and the whole deal. And then that was scrapped. So what Republicans have been saying, in the last 12, 24 hours is that they think President Trump will sign it within this 10-day window. They're not expecting him to veto it. If he does not sign it, nothing happens in 10 days, then it is enacted. So, but it really puts it into, a little bit of uncertainty, some chaos. Basically, what we heard from some Republicans on Capitol Hill yesterday was, this was a victory, a bipartisan bipartisan bill being passed by both the House and the Senate, something that isn't easy to do in this Congress. And then they were ready to celebrate, and then this happened. President Trump has said part of the reason that he postponed this or scrapped the signing ceremony is because he wants to see movement on a big kind of sweeping voter ID measure called the Save America Act. That does not have bipartisan support. I think there's going to be continued negotiations, but just a lot of tension and drama here in Washington this week.
Sure, and I guess there's always pressure exercised on caucuses to get into line, right? And perhaps this was one of those moments. But Trump is also looking for $88 billion for more war efforts, also farmer aid. How is he going to get on with that?
Well, that's another situation where you do not see support from Democrats, so they'd have to use their sort of party line measure to get it through the Senate, where you would otherwise need 60 votes to get something through the Senate. That also has some funding for to fight Ebola in Africa, as you mentioned, the farmer aid, and of course the big war effort with to replenish the munitions that have been used in the Iran conflict situation. And you see that is sort of if Democrats are not going to support it, it's basically a proxy vote on the war itself, which Democrats have been very critical of and opposing. So again, just a lot of fighting within the Republican Party, but also, of course, ongoing between Republicans and Democrats in Washington.
And Kate, it just happened in the last 2 hours. I hope you've had a chance to see it, but the EU has given the US trade deal a final approval ahead of President Trump's, stated deadline of July 4th. So I guess that's one more item out of the way, and relations trade-wise with Europe should continue pretty amicably. Is that fair to say?
But trade and tariffs have been a signature piece of policy for this president, and we've seen in European countries, as well as businesses, international global businesses, seeking, lobbyists here in Washington to help them navigate this situation. So there's been a lot of people involved in trying to either find workarounds or trade deals or, make bargains. It does seem like there's usually a way to find a path forward. So we'll continue to watch that for sure.
Kate, thank you so much across all of the topics for us today. That is Kate Ackley of Bloomberg Government. This is Bloomberg. So we got Micron earnings out of the way, but it's not over yet. First up today, we have US PCE, personal income spending, also jobless claims, all of that data coming at 8:30 a.m. Eastern. Then we have $44 billion of 7-year Treasury notes going on auction at 1 p.m. And then a host of Fed speak, Bowman, Williams and Goolsbee all speaking today. In terms of some movers before the bell, Micron extending gains after that blowout quarter and blowout guidance up more than 16%. We'll see if it reaches another record today. Qualcomm, a little bit of a halo effect, seeing data center sales at $15 billion by 2029. You're going to see that across the tech space today. And then Bio-Techne, Merck is going to buy the company for $11.3 billion. Here's your macro picture. Futures higher, treasuries wavering before the data.